Hi everyone, live from our virtual FinLabs. I'm your host, Natalia Zarowski, Head of Marketing UK and APAC at Synchron, and welcome to FinSights from our FinLabs, your podcast for the latest in innovation and transformation from our FinLabs experts. Today I'm joined by a very special guest, Tim Coates, Head of Digital APAC at Synchron. Tim, thanks for joining us.
Thank you for having me, Nat. I've been looking forward to this.
Excellent. Before we dive in to get the latest and greatest views on innovation trends in banking, can you please give a quick introduction to our listeners about yourself?
Sure. So I'm the Head of Digital in APAC. I've been with Synchron for about 7 years, working out of London, New York, and now in our Singapore offices. Had a great benefit of growing with the firm at that time. I think we're 3 or 4 times larger than we were when I joined. Today, I lead that digital practice in APAC, working with a lot of smart folk here and other locations to sort of design and build solutions, technology-enabled solutions that change a bank's operating model or business model. Previously, I led our blockchain center of excellence and I've been working in AI in more recent times. But to be honest, my passion lies in identifying the trend lines of how new digital solutions or capabilities will help to align to a bank's strategic goals and really keep aware and abreast of the headwinds facing an industry and work for solutions and use whatever technology helps me get those solutions to market in the easiest way possible.
That's great. Thanks, Jim. So for today's show, we're looking at innovation in financial services, something you've been leading the way on for Synchron for a few years now. As you said, the work that you did with the blockchain COE and now some of the work that you're currently doing on client side as well. What do your experiences tell you about how to drive digital transformation, and what does success look like in the future?
So Synchron's sweet spot is in digital transformation and digital innovation in financial services. So our whole company's operating model deliberately lends itself to applying that strong banking domain knowledge to major high-end technology challenges. So call us if you want that. So in the context of that role, I've had the benefit of hearing a lot about big, cool digital projects around the world, transforming banks, insurers, asset managers. But at the same time, I would say in the last 7 years of my career at Synchron, or maybe if you even go back to the last financial crisis, the banking business has got a lot tougher. The return on equity number for banks used to be around 20% back in 2008, and these days, particularly in Europe, you'll see banks barely exceeding their cost of capital, so like 6 or 7%. So I think what more and more we're seeing. Well, I guess the challenge that we have here is to reconcile that digital is this great, amazing thing for banks to invest in, but at the same time, the last decade of digital investment has seen banks' profits rapidly decline, and so is that because no one knows how to deliver these digital things successfully? Obviously not. But I think you'd be pretty warm if you point to APIs and the open banking shifts and how they and digitalization are really supporting a trend line of commoditization of banking. And that's been going at pace for some time now. And commoditization, that's the erosion of any unique competitive advantage that a bank might have in a particular area. So the service offering they give is less sticky, easy to swap out, and less easy to price compare against another bank. And so in that world where commoditization is really taking a hold, these digital investments are critical, for sure. You have to do it to survive. But at the same time, it's table stakes and it's making everyone the same. And so the place for relationship banking as a differentiator is certainly changing, arguably dying out, or at least the human subjective nature of it is. And so we're seeing digital transformation, to answer your question, as being really looking for that next level challenge now of how do I build something proprietary and sustainable advantages with what I've got, and how do I leverage my incumbency advantages.
Right. So just going back to then the commoditization that you were speaking of, I mean, this isn't entirely new. This is something that has been discussed over the last 10 years. But as you said, banks are doing it as a survival play, but surely there's different routes for banks to take here. I mean, I'm not saying commoditization is the only future for banks. Can one bank not be better off as a result of its advantages in operations in the back end? I mean, surely the commoditization route works out just fine for them. Or on the flip side, if a bank is more focused on, say, digital experiences, relationships, smart products, and is better at building a brand, then they'll defeat commoditization of their business model.
Yeah, so I can't give you a one cookie cutter answer for all segments of all banks. I tend to believe that those advantages that you speak to there, that in the long run, they're all going to even out to a zero sum game. And digital transformations have, certainly looking back a few years, were very rule based. And I don't think rule based digital processes or digital platforms creating any particularly sustainable advantages. So sure, there is that race to be the most efficient organization, to fast track that heritage modernization journey, be more flexible, adaptable as a bank. But ultimately, if everyone lands with the same self-service, fully automated, real-time platform, and that will be the case across big areas of transactional banking, then all we've achieved is a zero-sum game ecosystem. And banks probably have less to look forward to there. Banks would prefer to strengthen and rely upon a relationship banking model that's obviously existed in the past. But I think these days it's better to call that relationship banking to be more of a human plus machine relationship with an emphasis on the growth emphasis on the machine part going forward. I think there's one exception to the rule of breaking out of commoditization, and that's the ability for a bank to use its data assets to offer solutions that are driven by analytics or data science, and that's really getting us towards data-based decision making that I mentioned earlier, going beyond rules-based, and that's the differentiator I see banks pursuing long-term and reorganizing themselves around offering that. Data is an asset that will not even out over time. Either you have the historical transactional data and portfolio data of your client, don't, and so you'll see more and more banks trying to strengthen their data holding around their existing clients. And as a bank strategist, I'm just looking for more and more ways to capture more and more data about a client, and that is how I'll compete in the long run. Use my data assets to be a firm that stays in the value creation business as opposed to just being a value capture, which I think a lot of banks exist as today.
Yeah, let's just elaborate on that point a little bit further there on the value creation business. So of course it's about creating and adding value, but just expand on that point a little bit more. And who from the banks is doing this well in the market today in terms of value creation versus just capturing the value?
So in any industry ecosystem, beyond banking as well, and particularly where there's two sides to a market that's a transactional nature, there is a set, I like to look at every firm in that ecosystem as either a value creator or a value capturer. The value creators are the two ends are transacting. It's the buyer and the seller. They are creating value for each other, exchanging value. And then you have, particularly in banking, you have a lot of value capturers, those firms in the middle that are capturing fees in between those two sides in order to facilitate the safe and sound exchange of value between them. In the case of banking, it's these firms like the custodians and the market exchanges and the risk analytics platforms, for example, that are helping to exist to grease the wheels of a financial exchange and risk management. But it's if I'm a bank, what I'm looking to do is, or recognize, is that the most sustainable companies in the sector are the value creators. The value capturers are always the ones that are being squeezed on margins. And so you want to be a value creator. The value capture is probably where banks have existed heavily in the past because that business model is able to thrive and there's lots of information asymmetries, and the ability to have a lot of extremely valuable data locked up in closed data stores in a bank has always helped them know more than their competitors, know more than their counterpart, and find arbitrage opportunities that they make money off. So a bank plays both sides, but needs to be prioritizing areas where they're a value creator.
Yeah, so which one is the bank then? Is a bank a value capture or is it a value creator?
Yeah, so they're both. You're probably best to think of it as a spectrum. Different banks in different segments and different markets will be somewhere on that spectrum. But particularly with banks no longer being able to hold a great deal of risk on their balance sheet, thanks to Basel and the capital charges, more and more banks are not able to be a value creator. They aren't able to be one of the counterparts on the transaction, or it's just prohibitively expensive for them to be that, and they'd rather just be the facilitator or create the exchange. But yeah, as I mentioned, it's very important to recognize that banks, their advantage over time came from that knowledge superiority over the market, and that superiority, that information asymmetry, that existed for many reasons. They obviously, as a bank, you see more trades because you have lots more counterparts, and so you know where to find the arbitrage. But for me, the number one factor is that now we are moving away from this closed data sets where a bank can withhold golden source data, or a market infrastructure player can withhold golden source data and make it hard to get to. And that golden source data is telling me what the current bank balance is for an individual or a corporate. It's saying what their positions are, all their past transactions. That's now made available by open APIs. Then we've really ripped out a big deal of the friction that protected those firms that were holding that data store. So, I think an analogy that I always like to give on this topic is around the taxi industry. It's the same story that's happening in taxi industries. You have value creators here. You might have a driver and a passenger. A driver wants to make money, has spare time in a car and wants to make money. A passenger has somewhere to go and will exchange money to get there. In the past, we had these taxi companies that manually and expensively performed a function to connect those buyers and sellers. You had to call up and they would find a cab for you and it would come in 30 minutes and you'd pay extra for that because the taxi company would take a clip and then the driver would take a clip and the driver's also paying extra lump sums to get their taxi medallion. But that's all ripped up because we now can track the real-time GPS location of both a taxi, or a driver, I should say, and a passenger, and we can connect them via an app. And so all of that friction that was previously solved by humans and taxi companies is now solved by a platform, an API, an app on your phone.
Mm-hmm.
And Uber, Grab, Lyft, they all exist for that reason because they are enabled by incredible transparency and they create an efficient market where we did not have an efficient market before. So, now if you extend that analogy back to banking, we see all this investment from the banks, from the market infrastructure players, the exchanges, building out real-time API capabilities. So you have access to core infrastructure, you can see real-time data stores, and that is the exact same thing as real-time GPS. And so it's coming. And this is going to rip up that world we have today where we try to achieve delivery versus payment between two sides using Swift messages, using post-trade processes, using lots of intermediaries and custodians. APIs are going to allow a much more real-time swap, and that's going to eliminate massive amounts of that value capture, all that middle office and back office that existed, capturing fees to help facilitate two sides that just want to swap positions on something. And all that money that goes into value capturing is money that's taken directly out of the pockets of the value creators, the corporate or the individual. And so that's where the opportunity is. It's quite exciting as a customer, but for a bank, they have to keep rethinking about where the long-term opportunity is to create value.
Right. So just as an example then, if I go to a restaurant, I get the food and I pay at the end, the restaurant takes the risk that I will do a runner and not pay.
Yeah, exactly right. So that's why in banking, because we're talking about multi-million-dollar trades, we can't take that risk. A bank accepts the risk. A restaurant will accept the risk that if you order a $20 meal and you run, it's not the end of the world to them. But if you order a $20 billion FX swap, I'm going to hire a ton of organizations sitting between us to manage the risk that ensures that neither of us get gutted in that trade, and to facilitate effectively an atomic swap between the asset and the cash that we're swapping for. It's pretty transformative stuff that's going on.
Yeah, no, I mean, it definitely is and does sound exciting, but on, sort of the flip side, I'm playing devil's advocate here. Do you think this is a sort of a slow, relentless march to the end of banking? I mean, I understand from a digital perspective, the uniqueness between banks to a degree, is dissipating. For example, I don't want to get started on my interest rates now versus from when I was 18 years old now and sort of comparing banks on that basis. But surely this creates room for something else. I mean, I have a viewpoint and I'll pass it to you first, but how can banks thrive in today's current global climate and seemingly sort of, that relentless push towards a quote unquote digital first agenda?
Yeah, I think there are segments of banking for sure that I think are relatively dim and gloom with regard to the old way of doing things, and the sexy jobs within a bank perhaps are more on that digital strategist or the technology architecture side, and less on the front office relationship manager side. Call that doom and gloom or not, I don't know. It depends what your romanticism of banking is.
Mm-hmm.
But I think there's a few different ways to combat this. If I'm a bank strategy lead and I see this decline coming, and I'm looking and saying, well, for my particular bank, and with this inevitable train charging towards commoditization, as I highlighted earlier, what are the advantages that we have as a bank? What can we always do that someone else can't do, and what are the inevitabilities that are coming that we should just accept now? Because you might say, oh well, we could plow billions into a digital transformation of a segment that is the best it's ever going to give us is a 10% return on equity because it's going to be permanently commoditized. Then maybe we should just be pulling back from that segment. So that's sort of how banks have to think about what are the areas that will remain exciting and compelling to them long term, and where are they fighting a forever losing battle.
Yeah, absolutely. So just touching sort of back on commoditization then, I mean, as we were discussing before, it's a topic that's been around for quite some time already as is. But what really is the difference between before versus now with commoditization then? I mean, is it just technology has become more advanced, or that it's actually become, in a way, a leveler for banks, as you were saying before? Is it because there's more experts coming into the fore, competition from your challengers, so of course your Monzos and your Starlings of this world? Or can it be attributed to a combination of those things?
So I think what is the difference that's driving commoditization now? I think it's probably that API story and the ubiquitous nature of and the groundswell of support behind open API banking that's enabled by regulators or otherwise. But what that means going forward is, to the point I've made a few times here, is that data accumulation that an organization has is their ultimate differentiator. And if I look at a Monzo or a Starling, that is an area that they're going to struggle. They're going to compete on digital experiences for sure, and that is what they have been doing. But they are having to offer digital experiences that are so amazing that they can overcome an incumbent's advantages on data and network effects. If to give an example of what I mean here, if Coca-Cola banks with HSBC only around the world, and Monzo is going to try to compete against that, when Monzo has none of Coca-Cola's historical data on trades, portfolios, and how it moves when the market moves, then Monzo is never going to be able to offer anything like what Coca-Cola can get from HSBC. And same in the retail world. It's the same thing at a much bigger, massive, big data scale. Monzo is competing for my personal business when my incumbent bank that I already bank with knows a hell of a lot more about me and what my preferences are and how I, what may be activity that's fraud or not for me. So that means that, I guess my point here is that for me, digital experiences are very replicable and data is not. And thus my bet is on the incumbent banks to ultimately win out. I would just to add a little bit more to that, apologies, but your incumbents have a lot of other advantages too. I'm just highlighting, I guess the key thesis from a digital strategist perspective, but clearly a universal bank also can make massive savings from the net interest income of those deposits, and a Monzo or a Starling that cannot. They offer a more narrow offering, so they don't have that diversification of revenue streams for different cycles, and they don't have the deep enough pockets to play with the universal banks as in cyclical markets. I continue to bet on incumbent banks coming through that particular challenge.
Yeah, definitely. No, I mean, I love the point you made, how you can't replicate data, but digital experiences are replicable. I mean, I thought that was great. I mean, for me personally, I think customer experiences and relationships, along with the data that you're describing, is where I feel banks can have the biggest value add for their customers. Instead of looking at a product focus, banks should focus on their customers' financial health. So even say in terms of offers, it's going away from what's the next best offer to say what's the next best action. So just as an example, the action can be advice or encouragement, such as rewarding the consumer if they put in a certain amount in their savings account, or say if they reach savings milestones. And most people also don't really care about a bank creating a new product. And I appreciate that might be a bit controversial, but people hate to be sold to as is. And 50% of millennials don't even think their banks offer anything different. That was a study I read actually recently in Viacom. I think it was even 53%, which is, I mean, the number is quite staggering. And I was reading another article, I think his name was Paul Rowan. He's a cloud consultant at Google Cloud. And he made a great point when he said a bank's brand should be supported by the best possible customer experience delivered to the customer's preferred digital interfaces. So taking into consideration the country in which they reside in, the popular digital interfaces they use, so sort of going back to the ecosystems model that you were speaking of earlier as well. I think that's really the sweet spot, especially in a world of APIs and banks, as I mentioned, going the ecosystem route. That's how banks will differentiate themselves. But in order to do that and understand their customers, I mean, as you said, data remains key, which is exactly what you highlighted, and how your big banks, have years and years of data over the challengers. I mean, you could argue they're still definitely not harnessing it to its full power, but I think that's sort of what you were alluding to as well before, that once they do, that is the advantage that they have over the challenger banks. So just going back to then sort of what I was saying earlier about customer experience, where for you does the customer experience fit in all of this? In my mind, this is where banks are able to make a massive impact, and that's with the unique relationships they have with their clients and developing not just digital products, apps, but providing them really with tailored, customized experiences that will give them incentive to want to work with those banks, or rather bank with those banks.
Yeah, I think customer experience means many things. And, maybe immaturely enough, maybe 6, 7, 8 years ago, we might have thought it more from a user experience, customer experience being more of an interface-led conversation. And that battleground definitely happened. And then there was a conversation around jobs to be done, let's say, and that sort of focus on, personal financial management apps or financial health, you mentioned that earlier. Those have definitely been battlegrounds. And I think that more and more you can't really see a great difference between what your bank does and what a neobank might do. But another part of that customer experience is the experience of being predictive, receiving predictive and timely and useful guidance from my bank as something I need to know is happening. And that's that next best action piece that you mentioned. And that's, again, entirely database decision support. So yeah, that's my key takeaway here, is that, moving customer experience to go beyond rule-based processes into data-driven processes or decisions or support is a client experience play, as much as it maybe is going beyond the realm of the traditional UI designer that people used to think owned the customer experience. I think the customer experience is now owned by a very senior business lead rather than functional unit, horizontal.
Yeah, definitely. So, I mean, a lot of what we've really just been discussing now is really just innovation customized to the client. So a solution and approach to a problem is different based on the incumbent power of that bank. This goes back to your point at the start around digital solutions that align to a bank's strategic problems. Where do you find inspiration for ideation? I mean, you've been, as we said earlier, you were working with Synchron's Blockchain Center of Excellence. You've been working with multiple clients across the US and now Asia as well. How does a bank innovate its way out of a commodity trap? Like, what is really important here?
I think if you're an innovation practitioner, you have your favorite mind models, favorite patterns that you like to apply to every problem, and I'm no different. You have those people that want to talk about jobs to be done or other well-known frameworks. For me, I like to get into an analysis that are underpinned by a lot of domain knowledge. And for me, I'll often look at market structure to find opportunity. So we mentioned before, value creators, value capturers, looking at every firm that exists in the ecosystem for a particular solution or segment, and find inspiration in looking at, you could do a financial analysis of all those firms and see, circumstances where the value capturer, for example, is the one making outsized gains and taking huge clips of the ticket. And so that's in those scenarios, you might find opportunities to create new network solutions, i.e. consortium-based solutions, ventures. In other circumstances where that's not the case, you might be looking more towards digital transformation in-house to deliver more efficiently because you're already in a margin race. So that's an area that I like to think about a lot. And when you're going through that value capture, value creator conversation, you're thinking about what are the industry blockers that are stopping or allowing that value capture to capture so much, hold the market or hold some monopoly that they might have. I like to look into niche segmentation as well. Are there ways to divvy up the customers in a particular market? Maybe one type of customers is subsidizing another type of customer. That if you have an alcoholic person who may be subsidized by somebody who looks after their body all the time in insurance and in car insurance, for example, or health insurance. So in those markets, looking at is there ways we can divvy up this pooled market to offer more customized and bespoke offerings that are better than these mass market offerings. And then I also like to think about there are so many different parallel trends you can be following within banking or beyond banking, and what's the next possibility at the back of them. So you see huge advancement in data availability through APIs, but also a huge advancement in data quality. And so if data is higher quality and it's more available via APIs, then what can I do? And that's where Stripe and Plaid and a few others have found huge successes by building on top of that API centricity and looking for the next big thing. And it's very clever. So that's, as an innovation practitioner, that's where your mind goes first is, for my bank, where do I fit on these different mind models, frameworks?
Yeah, no, that's great to know. I was actually just going to say that we are just at the end of time. So thank you so much for joining us today. I mean, it was great to just pick your brains on the sources of innovation that you see ahead in our future, the commoditization we're seeing in banking, what it means for the industry, the importance of data and the advantage incumbents have with it, and more. Are there any final comments you'd like to leave our listeners with?
Well, firstly, thanks, Nat. I enjoyed speaking with you today. I think these stories and experiences are all born from projects on the ground in all sectors of banking, and we see patterns. And so I'm happy to speak further with any of your listeners today if you want to get in touch and talk about any of those patterns.
Perfect. Thank you, Tim. And thank you to our listeners for tuning in. If you're interested to find out more about Synchron and what we do, please visit www.synchron.com. And if you like what you heard, please like and subscribe. Catch you next time.